So I want to thank everyone for joining us today. My name is Deepak Varshney. I'm the CEO of Formation Metals. We are also a Quebec junior, copying Terry's model because Terry's done such a phenomenal job. And it's really because Quebec is the place to be. I'll go through the presentation today. We're going to make some statements. But really, I think Quebec is such a wonderful jurisdiction for us to work in. We've been able to, I think, for us, it has been an interesting year. When we first acquired this project and we first started looking at this project, gold was $2,000, and we looked at this as a call option on gold pricing. We love the jurisdiction. We love the deposit. We just knew that at some point in time, we would see these macroeconomic tailwinds come behind gold and really result in. I mean, obviously, I don't think anyone expected the price of gold to double or more than double this year as it has. But it was our thesis that this is what would happen with the gold price long term, and we're happy, obviously, to be here. So my background for everyone to introduce myself. So I'm a geologist. I'm also part of a capital markets family that's been in the industry for over 40 years, and so it has been very beneficial for me to be able to walk both sides of the street, so to speak. So I've understood, I understand the technical side of things. We have people far better than me as a geologist to actually run the programs, but I understand, what we're doing, and that's a big part of the reason why we have this project. But I also understand the capital market side of these things, and we've been fortunate because to put those two things together, we've raised over $17 million this year. Obviously, the market has been great for gold companies the last 2 months, but we came to trade in a much tougher market. But we've been fortunate to find a lot of people who understood our vision for this company, understood what I was hoping to accomplish with Formation Metals, and it's been a very good year for us. And so, this deposit, what really attracted to us was it had just under 900,000 ounces drilled in a reserve historically at 1.5 grams, right? So the global grade is about just over 1.5 grams. And for us, we saw this, as I said, as a call option on gold. As we go through the deck, I'm going to talk a bit about the concept of boring sexy and sexy sexy. I say it all the time. Sexy is your high grade veins, which I think are very flashy, which really get people excited. Come out. We've got intercepts that are 51 grams over 0.8 meters. 48 grams over half a meter, 16 grams over 3.5 meters. But what really excites me with this project, and I think really the vision for the future, is the open pit model here. It's the boring sexy, right? We firmly believe we're on to 3 to 5 million ounces of open pitable gold, and really that is the story I'm here to tell. I'm here to talk about how our goal is to consistently deliver 10, 20, 30, 40 meter intervals of 1 to hopefully over 2 gram material. But really, what I tell people is if I could come out and consistently provide 20 to 30 meters of 1.5 grams at surface, because the deposit is very shallow. Most of the gold is within the first 200 meters vertical. I think that's how this will become a mine, right? We're in the heart of the Abitibi. We are in a wonderful jurisdiction. There's no issues with permitting, with First Nations, what have you. So our goal is simply deliver 3+ million ounces. And that's because, and we see that because of what was done historically on this project. So when you look at our share structure, we're quite tight, right? So we have 94 million shares outstanding, a market cap of about 27 million. But what's most important about this, because we've been successful at raising a fair bit of money, is we're almost half cash, right? So our working capital right now is 13.5 million. We're fully funded for 30,000 years of drilling on this project. And it's very exciting, right? We just started drilling. I have some pictures later on to show. We've just started putting out news on the drilling. But we're in a position right now where we're going to be able to now go out and execute at this project. I think a lot of juniors, where they struggle is, even ourselves, when we first started, our vision was to drill 2,000 to 5,000 meters because it's a tougher market. You're not sure what you're going to be able to accomplish. you start telling the story, you start meeting with investors, shareholders, and really we've been able to grow. The chart you see on the bottom right really does tell the story, where we've traded within a range between 30 and 40 cents. While we were getting, the big jump was obviously when we acquired the property, but a lot of this was us just getting the company ready, right? So that was raising capital, that was us getting permitted, meeting with First Nations, government, other stakeholders, and now we're finally in a position where we just raised 8.5 million in October at 37 cents. So, and I think we're trading at 29 right now, so actually a little bit below our deal price. But we're now in a position where you have those catalysts to really justify what you feel the value of your company is. And having 13.5 million in the bank puts us in a position to now go out and execute. You don't have to worry about the next drill hole because we're able to go execute our vision. I think that's a real challenge with junior companies. When you have only $1 million to spend, you're forced to often, look, our drill program, for example, we're not twinning any holes in our drill program. Our entire drill program consists of extension and infill. We need to go validate the historical model, but there's no sense in twinning it for us. For us, it's let's go find the gaps and drill those gaps. They said the gold was there, so if the gold is there, we'll find it. And fortunately, as we'll see later on in the presentation, so far the drilling has gone very well. At the same time, our vision is 3 to 5 million shares. So let's go miss, right? I think what people often, they ask, well, are you going to be upset if you miss? I'm only going to be upset if we missed 50 meters outside the deposit. I think, we have 15 kilometers of strike to drill here. Our goal is to keep drilling, drilling, and drilling until we miss, because we need to define the outside of the deposit, which is something that hasn't been done yet. They did a lot of drilling, they hit a lot of gold, and they walked away because of the gold price. So we'll get into that in a second. So again, 94 million shares out, half cash, management, strategic investors. We own just under 2/3 of the company, so it's very tight. The strike on the warrants we have outstanding are about 60 cents, so there isn't really any overhang in terms of the capital structure. So, as I said, this is in the Abitibi. We are literally adjacent to a past producing mine that went to care and maintenance 6 years ago. Over 200 million ounces produced in this belt, obviously very rich, and it's great for a company to be working here long term, because that means you understand that, or that the stakeholders understand mining, they understand environmental, they understand how to work with you to advance these projects, right? So we're here on the right-hand side by the star, but we're along the same deformation belt as Douay, as the Casa Berardi. And this is really, I would say, an underexplored part of the Abitibi. And again, part of that is because of the gold price, and part of that is because of the grade, right? So this kind of shows better our specific region, right? And this is the Vetsa mine right here next to our property. So Vetsa was an underground mine. We think their extension is right onto our property. We actually have the RJ zone, which was historically called the Vetsa zone. And largely this area was underdeveloped because gold was trading at $400 an ounce in the 90s, $800 an ounce. I mean, last time Agnico worked this property was 2008, and gold's $800 an ounce, and it was a big recession. If you went to a major today and said, would you like to start with almost 1 million ounces of open pitable gold at surface with a great orientation, I think everyone would jump at that opportunity. And it was our fortune that we were able to take a look at this project at a time when gold prices were suppressed and acquire this. The EV, our company today, is under $10 an ounce US for the historical resource. We're working to make that current. We think it's going to get bigger. And part of that is because of the cutoff and the work that's done historically. So there's over 55,000 meters drilled on this property. The bulk of the drilling is within the first 250 meters. The deposit is largely within 200 meters vertical, open at depth. It opens up at depth. It looks like grades improve at depth. But again, because of the gold price, if you look at the history of the project, it was discovered in the 80s, worked in the 90s, the 2000s. Gold is not where it is today. You don't have $4,000 gold. And their focus was very much on the high metal factor holes where they were hitting very high grade gold. And if you look at this, you see here is they hit gold. Well, and the resource is largely in the skinny corridor to the north here, but they hit gold throughout the that northern deformation zone, but they just walked away, right? I think for most companies, if you hit 10, 15, 20 meters of a gram material in your maiden program, that's something to follow up. For these guys, that wasn't good enough, right? At gold, a sub, $1,000 gold, a gram and a half doesn't really work. At $4,000 gold, I mean, this is something that you could almost say is a mine today, right? It's a small mine, but you could see how this would work. And so our thesis here is we're going to focus on the extensions along to the west and the east of the A zone. Largely, this is, as I said, the narrow corridor here is where they were drilling, where their old resource is. There's 6 zones where they found gold, but we think this entire northern corridor is one giant A zone, right? And our goal is to link this up, so, connect the dots, so to speak, here, so that we're able to produce that 3+ million ounces. But what's really exciting here is the central zone down here. So there's a fault that runs roughly north-south that offsets what looks like to us is an offset of this target down here, which is largely unexplored, handful of drill holes. They found, as I said, 8-10 meters of a gram plus material, but walked away just to focus on the high metal factor zones in the north. And so for us, it's let's go drill to the west, let's go drill to the east, let's also go do some work here in what looks like a clone of the work or the zone to the north. And so really that's going to be the focus, as I said. So A zone, RJ zone, the 3 other zones, but we call it all the A zone. Now, one of the things I want to bring up from this slide is the continuity of this deposit. So historically, if you looked at the A zone, the East zone, RJ East zone, 84% of gold holes intercepted gold. The RJ East zone, 76% of holes intercepted gold. The East zone, 93% of holes intercepted gold. And that's really why I say this is boring sexy, right? They just kept hitting 1 to 2 grams of gold and walking away. Now, that's not to say there weren't higher grade zones. So as you can see, that star highlights a 90 gram meter hole. We've got intercepts, even in the bulk tonnage, we're looking at 35 meters of a gram and a half. So there's clearly big widths. It's just, it didn't fit their model historically for what they wanted to do. For us, we see this as one giant corridor to be drilled out. That's how we're going to get to that 3 to 5 million ounces, right? This is over 15 kilometers of strike to go explore this project. And really that Z is going to be critical because ultimately, if we can make a maiden discovery of our own work and that central zone, that southeast zone, that's going to blow the top off what this deposit could really be. So the A zone, historically, 55 drill holes, 15,000 meters, 84% holes delivered gold, and some very good intercepts, right? Just 1.7 grams over 35 meters, 2 grams over 15 meters. This is a real focus for us to expand, right? And I think this, you can see even here, they have drill holes to the west. These holes all found gold, and yet no follow-up, right? Why? The skinny corridor here to the north, that's the resource. Why is there no follow-up to the south along here where we're hitting, 30, 40, 50 gram meter holes? Because for them, the grade wasn't there. For us, the grade is there. And that's really, it's actually kind of cool because usually you would see a project like this, there would be no room to expand to the south here. You'd be expanding along strike, but we can actually grow the resource at width, at depth, and along strike. So very open. The RJ zone is the same thing, right? That's your, as I said, the sexy zone. 51 grams over 0.8 meters, 50 grams over half a meter, 16.5 grams over 3.5 meters. But the A zone for me is the focus. And it's because, I look at companies like Newfound Gold, and not to poo-poo their deposit, but 750,000 meters delivered a 1 million ounce resource. And I see what we could do with 750,000, we don't even need 750,000 ounces, right? I think our 30,000 meters is going to take us a long way to that goal of 3+ million ounces. And that's why I like the boring sexy. Um, but this would be the focus of the underground mine, as this zone we feel it connects to the old Betsa mine to the west. And so we'll have an open pit component that is the primary focus of a project here down the road with an underground, and high grade flashy part. So as I said, we're fully funded for 30,000 meters. We commenced drilling in September, and it's gone great, right? So far, our first 13 holes couldn't have gone any better, right? So it was a big surprise here, which I think for us especially was the VG that we hit in two of the holes, including one in 13, which is in a almost 31-meter interval. It just tells you that there's room to improve the grade here, where they've done so little drilling outside of what that core is, that we can go out and deliver material improvements in grade within the existing or the historical resource, right? What it really excites me though is the widths that we're hitting in the A zone in our bulk tundra department or target. So we were hitting over 200 meters of that target mineralization, which ended again in mineralization, and hole 8, same thing at 3, and these are just long intervals, and these are both holes are within large gaps of the historical model, and we feel that we're going to see material improvement a result of these holes. We're hitting, as I said, 30, 40 meter intervals. This one had a 70 meter interval of that target mineralization. And it's the same thing over and over again across the property. It's very consistent. So it's easy. Geology is never easy. And it's not as if you could just extend this east to west and say, oh yeah, just copy and paste. But the fact is that with 55,000 meters drilled at this property historically, you know what to look for. And so when we're drilling and we're seeing these intervals, this is what we're looking for, right? Look, the VG was a big surprise, and I think it shows you that there's a lot of gold in the system. But this is, to me, that 70-meter intercept is what's going to get everyone really excited, and so we're very fired up to get assays out. 30,000 meters fully funded. We have an ongoing phase 1 program. Ultimately, this kind of outlines what our vision was for the 30,000 meters to start. This will be refined as we obviously work on the project, right? So our future here is going to be to do this phase 1 program. We're going to shortly commission a resource update so that we can bring the model current. I think that resource update will wow the market for a couple of reasons. Number one, when we look at the historical data, what we see here is they use the half-gram cutoff. It doesn't make any sense, especially in the context of today's market, right? We're seeing people come out with 0.2, 0.25, and just that alone, will give us a lot more, I would say, gold in a potential resource. The other thing is when we review their historic resource, what we find is that they were cutting out a lot of intervals as waste, just again because they treated it differently because of the gold price, because they're cut off. We're seeing an opportunity here to essentially grow our historic resource just through an update, but also through the drilling we're doing right now, right? This infill extension program will A, strengthen the model, B, what we hope is improve the grades within what they had modeled historically, and the C, give us an opportunity to see what is to the west and to the east. And so the data compilation is done. The modeling is going on right now. We're going to do a big geophysics and soils program across the property. Our exploration budget is just over $8 million through the end of 2026. So we have a lot of money to deploy here and put to work. The funny thing is the financing we just did in October was our first hard money financing since we came to trade in last October. And it's simply because we had raised flow through over and over again to put the money to work. Our focus was very much in the ground. We raised money, hard money, because we wanted to pursue an M&A strategy, right? I think this is a district that's been underlooked. I think there's a lot of opportunity here for us to buy our neighbors to the west, to the east, to the north, where to the south, where fortunately, because we're first to market in this area, we are the big kid on the block, and because we're well funded, we're able to capitalize on that opportunity. And so 30,000 meters fully funded, drilling going on right now. Assays are going to be out hopefully later this month, but definitely by January. And really, our focus is going to be to grow this thing to 3 to 5 million ounces, right? So to sum up, when you look at formation, I think what it comes down to is this is an underlooked deposit that already has a significant amount of work done on it to help de-risk your investment thesis. It's in a wonderful jurisdiction. Quebec is a great place to raise money. You have a lot of support from shareholders, a lot of support from investors, from funds. As I said, we've been fortunate to raise over 17 million this year to develop this project. We are almost half cash right now at our current market cap. I think that's a great, it tells you, look, Northern Superior just got bought for $42 an ounce. We're trading at around $10 an ounce. So it tells you that there's a disconnect. When you look at other companies with bulk tonnage deposits, I mean, two of the shining stars we're aiming to emulate are obviously Sitka Gold, Mayfair Gold. Both are wonderful companies. Both have had great re-rates this year. We look at our deposit, we see our grades are better. Their deposits are bigger, but we can see if we get to work and we're able to, increase the size of the deposit, where we could catch up, right? And so we could go from a 29 million market cap to a, 290 million market cap, 450 million market cap pretty quick. It just comes down to us getting to work and really delivering in the field. 94 million shares outstanding, 2/3 of which are owned by management, our anchor shareholders, funds we brought in, come from a family office that's been around since the 90s. We have over 100 years of experience collectively on our board, and we've raised over $100 million, right? And we've shown that this year with the money we've raised. And so, I like to always say it's like we're well funded, well managed, well structured, and I think this is what you look for in an investment, right? So I have been buying openly in my own name. My family owns close to, I would say, 8% of the cap table. So I guess with that wraps up. I think we're open for questions. So I'll leave it there.
All right. Thank you very much for the great presentation, Deepak. I think that maybe what we have to take out from the presentation is that, boring sexy is the new sexy. So if we start with that, let's go back a bit, okay, to explain it, the difference with being sexy and boring sexy. In Quebec, one of the biggest success was brought a few years back with the Osisko Group when they stop looking from a high grade deposit into a lower grade, and that became not just boring sexy, money printing machine sexy. So
For sure.
in your case, is it a bit of the same premise that you're taking, changing the angle of geological view on the deposit and saying, hey, listen, maybe there's a lot more there than what the previous owner thought?
I mean, that's exactly it, right? I mean, I think if you look at the successes, you nailed it, over the last years, decades, it's all about having a lot of gold that is economic. And these lower grade deposits are now very economic at the current gold price, and they are very sexy, right? And you've seen that with the takeouts this year. Probe has been bought by Fresnillo, Northern Superior, and it's just a function of having a lot of gold and a lot of, I would say, having a lot of continuous gold, right? The economics work when you have a lot of gold that's surfaced, that's easy to dig out. So,
well, this is for sure. And then, moreover than that, one of the things that you have to tackle is obviously operational cost. And then the difference between open pit and underground is tremendously important, both in CapEx and both in then OpEx later on. So, and then comes permitting also in another phase of it. But before we get to all of those with your company and facing those challenges, well, expansion of the resource. Where, how, what are the priorities? And when you say, for example, additionally to that, when you say, for example, M&A or acquisition again, are there any good results around? Do you see some continuity somewhere? What is your vision of the next 12 months on that part?
Yeah, so look, we're going to be coming out with assays here in the next, as I said, later this month or early January. We're actually drilling in the field right now, and we've as we compile and interpret the data, it comes out. Look, my goal is to deliver a resource estimate by Q2 of this year. That's what I'm aiming to do. I think that it would be great to be able to come out to everyone and show them, look, this is what we have based on the work we've done today. And also, more importantly, where we can go in the future, right? Because you're not going to get to 3 million ounces on day one. Or first, I would love to come out with 1.5 million ounces in Q2. That'd be wonderful. That'd be a huge step up from where we are today. But you're going to grow slowly, and we'll be able to show everybody how do we grow this, right? And a big part of that is going to be the work we're doing today right now to close any gaps that we have in the historic model. At the same time, a lot of it's going to be, our strategy is going to be around acquiring that ground. We're in discussions actively with our neighbors because they see the value in consolidating this district. And so I think we'll have and I'm hoping to have some announcements in the next 2 months, right? These things take time, but there's pretty material projects that are nearby that have a lot of synergies with what we have going on.
Well, absolutely. And then when you talk about changing the cutoff grade, obviously that's because of the price of gold and so on. So this is a logical step. But if, for example, you change cutoff by half from 0.5 to 0.25, is it a direct ratio to doubling the resources, or is it not just a one-to-one ratio?
No. I wish it was that easy, but no. We should see material improvement, right? Because when we look at some of these composites that they've done historically, they're just shorter than what we are seeing, right? We're seeing some of these holes where they've got, say, 10, 12 meters being extended to 18 meters, right? And we're not talking about because we're adding 0.3 grams. I'm just saying that's, when you start blending these intervals, you get much thicker intervals, which make a lot of sense, right? You would mine 0.7, 0.8 gram material, right? You wouldn't throw 0.7, 0.8 gram material away. Yes, it's over half a gram, but if it's in a smaller intercept, you might say it's waste. I don't want to include this in my resource, right? What am I going to do with a narrow, low-grade interval like that? And so I think, I wish I hope, who knows, maybe, knock on wood. I think more likely what you see here is, I would be ecstatic if we could increase it by 30 to 50%. That'd be amazing.
Perfect. That's great. Well, Deepak, that's all the time we had. I have to move on to the next presentation, but this is very good project. Just off the rails. It's amazing to see how you guys are doing great. We're going to continue looking and update on your story, and hopefully we'll have you at another presentation of the IIF, and you'll be able to share the great news with us of what's coming.
Thanks again for having me.
Thank you very much.